Hey Brew Crew, Brewer here. Welcome back to another quick update. So I wanted to do a quick retrospective on one of the trades that we did this week on NVDA, which I know I talked a lot about on Twitter and in our videos this past week. Now, as you know, on Monday here on July 27th, we had entered a trade in NVDA, and in our tweet and in our videos, we mentioned that we were attempting to target the all-time high near 431 for Friday, and we were expecting this trendline resistance here to first cause the stock to stall out a bit before going higher. Hence, we put on a 430, 435, 445 call broken wing butterfly in an attempt to capture a move higher into this 430, 435 range by Friday, all the while collecting a 6-cent credit in total, meaning we got paid to put on this trade. It cost us nothing, and we actually collected some coffee money. Now, the stock did exactly as we expected, stalling out here on Wednesday before continuing higher into Friday. However, NVIDIA didn't quite get to 435, which was our sweet spot, and had it expired there, this butterfly would have been at the max value. But of course, we never play the butterfly with the expectation of this sort of binary outcome because that would be very difficult to pull off. You essentially need to wait until the last hour of trade on Friday and hope that NVIDIA is at the sweet spot and continues to stay there. But I wanted to note that even though NVIDIA didn't reach 435 on Friday, and in fact, notice how it actually opened around 422 on Friday, our spread still offered us a way to lock in profits in the morning and capture even more profits if any upside were to happen throughout the rest of the day. You'll notice that on early Friday, 7:05 a.m. Pacific time, we had sent out a tweet saying that we made an adjustment to turn the 242 broken wing butterfly into a 132 butterfly, essentially an unbalanced butterfly. And in doing so, we locked in additional 55 cents of credit. To represent this graphically, let's switch over to the risk graph. So this was our position going into Friday, 2 broken wing butterflies, the 242 structure, right? Because you have the 121 here and another 121 here. And you can see here that they're identical except the price that each was filled at. And by the way, you can find these in our tweets and on our trade spreadsheet. And as you can see in this risk graph here, that as long as NVIDIA stayed below 440, we'd be profitable with a max profit of roughly $1,000 if NVIDIA expired right here at 435. And of course, anything lower than 430 and we'd simply be profitable at $6, which equals the 6-cent credit that we collected initially when we put on the trade. However, on Friday, we made the following adjustment, right? We sold out a 430 call and bought back a 435 call. This adjustment essentially turned our risk graph into this now, where if NVIDIA ended up expiring below 430, we'd actually be $61 profitable instead of just $6 before. However, this did cap our max gain from $1,000 to roughly $560. As you can see here, the peak has shrunk. It also shifted our upside break-even down from 440 before the adjustment to around 437 after the adjustment, meaning if NVIDIA started to trade above 437, we'd start losing money. Now, the main reason that we made this adjustment where we sold out one of the 430 calls and bought back one of the 435 calls was this. On Friday, we noticed that the stock had a hard time getting any sort of rally up to 430. This was confirmed by the internals early on, which was mostly neutral to bearish. The ticks were neutral and breadth ratios on both NYSE and NASDAQ were negative. The thought process here was that if only Apple, Amazon, and Facebook were dragging the market higher, while the rest of the market wasn't cooperating and couldn't get a lift, we should see a hard time for NVIDIA to get a lift as well, especially, and here's the important part, especially with only 6 hours of trading left before this entire position expires. So we were comfortable reducing our upside aggressiveness by selling out one of the 430 calls. But we also didn't want to just be short 4 of the 435 calls, and seeing how these 435 calls were relatively cheap at the time, they were around 29 cents, it was worth buying one of them back. So in the end, instead of being long 2 of the 430 calls, short 4 of the 435 calls, and long 2 of the 445 calls, after the adjustment of selling out one of the 430 calls and buying back one of the 435 calls, we were now long 1 of the 430 calls, short 3 of the 435 calls, and long 2 of the 445 calls. As mentioned earlier, this capped our max profit potential from $1,000 to roughly $560, but we were okay with that because on Friday, NVIDIA was struggling to get any sort of rally, and even if it did, think about this. We were still long a 430 call to help us capture any upside move, and we wouldn't really need to worry about the 3 short 435 calls because remember, throughout the remaining 6 hours of the trading session, those 435 calls are going to be too far out of the money to retain their premium. So had any small rally happened, those calls would still be near zero, but the 430 call will rise in value a lot faster. And this 132 butterfly would have expanded very nicely for us to sell back out. Of course, if we had a sharp rally higher, if NVIDIA had suddenly rallied, let's say 15 points out of nowhere, then yes, we'd be screwed. But were the internals confirming that? Absolutely not. And we'd also have a chance to close the spread out because it would first expand in our favor before going against us. So anyway, after our adjustment that morning, NVIDIA fell even lower, and in late session, when it attempted to rally, it ended up stalling out at 424, which was too far still from our long 430 call. That's fine, no harm, no foul. We ended up pocketing that extra 61 cents of premium, and the rest of the position expired worthless. Basically, instead of walking away with 6 cents of premium, we collected 10 times more simply by taking advantage of all the signals we were seeing on that very last day of expiry. So, couple of takeaways. First is never stop looking for opportunities to adjust and harvest more profits even if you're profitable already. We could have left the spread as is, as a 242 butterfly, and just have it expire worthless without making any adjustments and walk away with just 6 cents of premium. But instead, by smartly managing the position, we were able to walk away with 10 times more. And the second takeaway is always back up intraday trades via the internals. If the internals were extremely bullish on Friday, we wouldn't have made this adjustment. But because we saw how uncooperative the internals were in helping NVIDIA rally, we felt confident making this adjustment, and we felt comfortable holding the 132 butterfly throughout the rest of the trading session on Friday. Alright, so that's basically it for our NVIDIA trade. I know this is probably a lot to soak in, but I feel like this was a very educational opportunity in many aspects, from watching the internals to adjusting and making the most out of your options trade, that I hope many of you can learn from, because that's the whole point of trading, especially in the options world. Knowing these things can give you so much more of an edge if you know the right things to do at the right times. So rewatch this video if it helps you understand things better, and feel free to leave any questions or comments below, and we'll do our best to answer them. Okay, so I'll leave you guys with that. Stay tuned. In our next video, we'll talk a bit about the markets in general and things to look out for going into next week. But for now, stay safe, Brew Crew, and we'll catch you in the next video. Cheers.